Hello and welcome to Premier Study and Investing. It's great to have you. Thanks for stopping by.
So I've done a Moderna update. I did it right on the eve of the ACIP meeting, which I think was 17th and 18th of September. Here we're at October 14th. Shares will come up a little bit since that meeting, since basically the Molhatra crowd was generally disappointed with the ACIP's sort of soft hands. I'll say it like that. It was 2 days of talks about Hep B, and then the Friday was covering COVID. Obviously, they decided not to make it a prescription-only situation to get COVID products, but they changed it more to a advisory type of situation where each patient would speak with their doctor on a case-by-case basis. And then recently, we saw this CDC reversed their stance and decided to go ahead and recommend it for pregnant women. So these are the COVID-19 injections. So kind of came up a little bit short of $30, $28 range. And then today we're at $26.57. There's a couple pieces that I thought were interesting. One of which here is this article from Seeking Alpha about the most shorted S&P 500 stock in September. And guess what? It happens to be our stock of interest, mRNA Moderna. Moved up 2 places in September to become the most shorted S&P 500 stock as a percentage of float in September, followed by Super Microcomputer and Campbell's Soup Company. So it has been basically since summer of last year, 2024, where Moderna was kind of holding the number one shorted position just among the bucket of healthcare companies. But now we've expanded all the way to the most shorted stock in the whole of the S&P 500. So that's really, really, really interesting. We can always go and look at, I like to use FinViz. We were just here. But basically, we're at something like 18.66. They only update these, I think, once a month, the short float on here, so you could get a more accurate, up-to-date number. But generally in the 18% range. Like they said, this is as of September. So looks like it's monthly. Yeah, 18.66, the same number we're looking at. So we won't know what's going on in this month, October, until we get a report that will come out next month in November. 18.66. It says the shares have advanced 6.7% over the last month, surpassing the medical sector's gain of 1.17 and the S&P's 500's gain of 4.2. So yeah, I mean, that ACIP decision almost a month ago was really a letdown for people like me who were net short. So, there were some close votes in there. There was definitely some interesting information. And I'll show you one site that I came across just today. Yeah, so if you go to Substack, Aussie17, this latest post here is this 300% increase in ALS. It's like a motor neuron disease, basically leading to paralysis and death. Very little, as far as I could tell, no cure and difficult to treat. So ALS, we sometimes call this, I believe, Lou Gehrig's disease in the United States. As just, but this came out October 14th, 2025. So today, actually, I saw it just through some Facebookers. And essentially, what's really interesting is this person has a background, they say, in working at some of the largest pharmaceutical companies in the world, many of whom have bases in Singapore. Basically describes why they like Singapore, because they have this thing called SingPass, which is basically like a digital ID, and they had vaccination rates up to, I think, 92%. So they're very, very heavy-handed, no jab, no entry. You can see here in this video, and vax rate shot up to over 85%. This is for the mRNA, and then if you add in the other non-mRNA vaccines, it hit 92%. So it was one of the highest globally, and basically they just go on to talk about, this is an interesting thing to watch, but it's 11 minutes long, about some of the IgG4 class switching, the problems with proteins being misfolded. You had the SV40 promoter. You had a lot of talk about the studies either with DNA contamination above the threshold, allowable threshold. They had some talk about basically mRNA material not staying in the injection site, getting into the brain, and some other just really interesting information that's hard to keep up with, like that some of the studies that were used sort of weren't the same. So some of the safety studies were done using something else than what was given to the public, on and on like that. So interesting to watch this 12-minute presentation or clip from that ACIP meeting in September 17th and 18th that I described earlier. And it's sort of 12 minutes of really negative information. But for the bears, this is interesting. They're basically talking about excess deaths starting here after essentially you had the rollout here. And then by September 12th, 2021, you started to see this huge run up in excess deaths. And then at this point in the graph, COVID becomes much less severe. And so they basically say, obviously, if the disease is less severe, then what's causing the continued increase in excess deaths? Yeah, it's probably the vaccine. That's what this author argues. So they look at quarterly excess mortality. Singapore had one of the worst sort of numbers, although Qatar was very high as well, 60%, 43, 56. So pretty high, Singapore and Qatar. Just a lot of data, again, beginning of the vaccination, 80+% boosted. Essentially what they're arguing is that because you have this Sing pass and this really high control and high data collection capacity where people can't really fraudulently come up with say like a vaccine card, that it's very, very, very well controlled. And basically they're saying that the data is really good. Not only that, he said that they also give you information, really good raw information as far as boxes of this drug that is given, Riluzole, that basically is the best. It's not a very good solution, but it's the best solution that we sort of have as far as treating ALS, this neurological disease. Yeah. Essentially, the sales really came up a lot. And he basically debunks a lot of the normal reasons why we might say, oh, well, sales are up because of the price. Well, we're not looking at terms in terms of price, so there's no, price per box confusion or anything like that. You're looking straight at the number of boxes sold, so you're looking at raw demand data. He also says that this is an old drug, 30 years old drug, and so it's not like it's this new fad or this new thing, or all of a sudden people just really want it all of a sudden because it wasn't available before. That's not the case. And so you can see the increases from something like, I don't know, let's say 8,000 or 9,000 boxes pre-COVID. During COVID, it was maybe 12, but now you've jumped up to 35,000, maybe 38,000 boxes. So apparently a lot of people are seeking a drug used to treat ALS in the post-COVID era when you have an 85% vaccination rate with mRNA tech. So, this is maybe compelling for you as an investor. Like I said, it is the most shorted stock in the S&P 500, so it's compelling. I don't think just this alone. We've had a lot of compelling, worrisome, troublesome data come out for years and years and years. The people at the McCullough Foundation, obviously we've covered some of the Ron Johnson and Senator Blumenthal public hearings for experts to come and talk. Aaron Siri, who's a trial lawyer. Yeah, Peter McCullough came out. We had people from the React 19 organization representing vaccine injured individuals. There's also I believe his name was Michael Scott. Michael Scott is the guy from The Office. That's not his first name, but the man's last name was Scott, and he was representing Stanford University. And it was a really bad hearing, basically, I would say. It sure seemed like Mr. Scott or Professor Scott, Dr. Scott, I guess we should say, was somehow maybe compromised in his ability to speak freely about knowing some of the dangers. The best he could do was kind of plead ignorance. And it just wasn't a good look. He seemed to know a lot less than a lot of the other people on the panel with him that day. And so being a PhD in immunology, I believe, at Stanford, you'd expect him to be tip-top, cutting-edge, aware of all things that are going on. But, he sort of wasn't. And that's some people would say okay, other people would say no, that's not acceptable for a person that sits in his position. Anyways, I think the last big kicker from this story is that essentially some people, for a long time, we've argued, well, maybe it's maybe it's the disease that's causing this big jump in ALS or demand for ALS drugs. And what he says basically at the end, so here at the end, this is probably like the best sort of ending comment. He said, face it, we've got full-blown post-jab health hangover brewing. We know that mRNA sneaks past the blood-brain barrier and throws a wrecking party in there. Some eggheads might finger the virus itself, but hold up. Even then, the Cleveland Clinic's own dive shows the more jabs you stack, the itchier you get for COVID. Flipping that excuse on its head. Moot point, folks. Game over for the spin. So here you have the earning estimate for September 2025. You have people saying that it could lose as much as $3.10. That'd be a bad situation. Or they could have a loss of 75 cents. That would be like the most optimistic person. But in general, we're looking at September 2025 earnings coming in at negative $2.09 on average. And, revenue somewhere under $1 billion. So the book value per share is actually $24.16. So it'll probably drop to something like $22.16, let's say, with a $2 loss EPS. That'll basically be paid out from cash or some other way that they'll have to cover that. They're not a debt heavy company, so it's just basically held at book value per share for a while, despite all this bad news. And let's not forget they had Albert Bourla from Pfizer come and shake hands with everybody and all that stuff about a week ago at the White House with Trump, and people said that RFK Jr. looked very angry, and you can make of that whatever you want. But I will share with you this one last thing, because this stock is definitely not immune to the macroeconomic environment, and I would say the big drawdowns across basically all equities in going back the last 6 months was in April 6th or whatever that was. Trump announced all these tariffs, and the market had like a 20% pullback or something, right? So think about that. Remember that. Basically, equities are screaming high in terms of valuation, the amount that people are willing to pay for a dollar of earnings. So PE ratios are very high. Historically, they're very high. So probably expected a bubble. Everybody's all excited. But listen to this macroeconomic analysis from one of the government heads that's working on some of the trade relations with China and the United States.
Right. And if you look at their statement from a morning or two ago that they put out, they were very careful to say, well, we don't want to ban everything. We're trying to do something that makes sense for everyone, and we think it will have little impact. I mean, first of all, we have to be very clear-eyed about this. I think it's a problem to have the program at all. But you can see by some of that language, they're starting to realize they need to find a different pathway.
What about the 100% tariffs? Is that happening on November 1st?
Well, or sooner, right? That's what the truth said. That depends. I think a lot depends on what the Chinese do. They are the ones who have chosen to make this major escalation. And like I said, our agreement was we're going to keep our tariffs low if you keep the rare earths flowing. They're now saying that they're going to control more rare earths and downstream products. And so it makes sense that we can raise our tariffs.
But does that strategy of threatening and raising tariffs on China work? Because China, unlike some of these other countries, has leverage. And it has leverage in the form of these rare earth minerals.
So we found that it does work. So back in April and May, when we had tariffs of about 140% on the Chinese, this was very challenging for their economy. Their economy right now is export driven. They had, their property values are down. They have all the infrastructure they need and more. They have super high youth unemployment. They need to export their way to keep growth. And that means shipping to the world's largest consumer, the United States. So this is, when we had the high tariffs back in May, they came to the table because of that. We were already talking yesterday. So both sides have leverage. We're very confident. And I'm just talking about tariffs. We have our own export controls we could impose if we needed to. We have things that could really be painful, but that's not what we're trying to do. We're trying to have a good relationship with the Chinese, and so we need them to change their approach.
What are you trying to do? What does a good relationship with the Chinese actually look like?
So from my perspective, with the Chinese, we have a totally unbalanced trade relationship. We have a giant trade deficit that's built up over years because of unfair trading practices. So my view is we need to have more balanced trade with the Chinese. Probably needs to be a little smaller, and it needs to be non-sensitive goods. And there are things we can do, right? We should be selling them ag and medical devices and aircraft, and we should be buying things from them, consumer goods, low-end tech. There are areas where we can and should be trading in a freer kind of way. But the U.S. is not the only agent here. China has to want to do this. They want the old deal they had, which was totally unfettered access to the U.S. market while cutting off U.S. access to their market. And we're not going to have that anymore.
So if the the goal is to keep buying from them consumer goods, I guess you're talking sneakers and toys, things we just don't make here.
Yeah.
Why put tariffs on those products, which do risk to increase the price for Americans?
Well, first of all, we make some of those products here. We make them, and other trading partners who are more reliable make them as well. So there are other sources for these things. And actually, we've had tariffs on the Chinese since 2018 when President Trump first did it. And we've seen a lot of diversification in sourcing. Our trade deficit with China just this year, in the past 6 months, has gone down by 25%. So we're already less dependent on them now than we were 6 months ago.
Right, so are President Xi and President Trump still on track to meet this month?
So right now, there is a plan. There's a scheduled time for that.
There is. It's on the schedule.
There's a scheduled time for that. Whether it'll go through or not, I don't want to pre-commit either ourselves or the Chinese. But I think it makes sense for people to talk when they can.
Was the president worried about the market reaction that we saw on Friday after the ratcheted up tensions?
I mean, listen, we always watch the market. We watch the bond markets. We watch everything. We're really focused on the long-term success of the U.S. economy, which means reshoring supply chains and having stability in our relationship and not being dependent on China and others for critical sectors. But of course, we want to make sure that the market is also responding to appropriate information, right? And so I think you've seen the market settle out this week as they realize that the president and his team, we want to work with the Chinese.
And finally, just in terms of your own responsibility as a trade rep, because we see the Treasury Secretary in this administration involved in trade talks, the Commerce Secretary, Howard Lutnick, involved in these trade talks. How do you guys divide up the discussions and then the implementation?
Sure. So when it comes to what I would call pure trade issues, which are tariff lines and non-tariff barriers overseas on our services and investment, all kinds of things, the Office of the U.S. Trade Representative, my agency, we have the statutory authority. We're part of the White House, and so we lead on that. Obviously, I work quite closely with Secretary Best in a variety of situations. China's a good one because there are macroeconomic issues that tie into the trade issues, so I work with him. Secretary Lutnick is very focused on promoting U.S. exports and investment in the United States, and so he's a great partner when we're dealing with some of these developed countries, Japan, others who want to invest here.
Today, actually, the tariffs go through on lumber and kitchen cabinets and all of that. Are we going to see more tariffs and new categories coming?
So again, this is an area where the Secretary of Commerce has some authority under Section 232, and so you saw some of those tariffs go into place today. We have the semiconductor tariff program, we have the pharmaceutical tariff program. The president has done a lot of signaling on that he wants to see he wants to see more investment in the United States for those things, and that's a pathway to not have tariffs, right? The point of those tariffs is to reshore supply chains, and we see that happening with pharmaceuticals and semiconductors. But you may see in coming months, reports describing the status of those investments, and if there's a tariff needed, what that might look like, how that might be phased in.
Well, we certainly appreciate you joining us and giving us all the information, especially on China, top of mind for the market right now.
For sure.
It's good to see you, Ambassador Greer.
Thank you very much.
James.